Breaking news on Martin Lucas Investor. We've got a very interesting silver story, potentially a silver short squeeze here in the markets that is unfolding. We've got planes full of silver flying into the UK. I'll tell you exactly why. Is there going to be a short squeeze? Is there going to be silver going to $100 an ounce? That is all possible. And let me tell you the story that unfolded here in the UK just a day ago. So the silver squeeze deepens as London's market seizes up. I'm going to give you the full chart analysis on silver as well within this video. It's going to be a very short one, so do make sure you watch to the end. But these stories, 5 top stories, the deep dives, the charts, the economic calendar, everything you need to know every single morning is from our own newsletter. So this is taken from our newsletter. It's the first link in the description. Do make sure you are signing up to the newsletter. There is a free plan and a premium plan. The link gives you a 1-week free trial. So what has happened and why is it so interesting? Silver prices have rocketed past $52 an ounce, hitting a record, and a violent short squeeze grips the London Bullion Market Association. Remember, the London market for commodities and metals is the largest in the world. So physical inventories in London's vaults have collapsed to their lowest levels in over a decade. There is literally a run on silver and physical metals. We're running out of gold and silver here in the UK. So the physical inventories in the vaults has collapsed to their lowest levels in over a decade, forcing traders to scramble for metals to settle contracts. According to the Financial Times, some dealers have been flying silver bars in from the US and Switzerland to meet delivery obligations, as local supply runs dry and vault operations warn of delayed settlements. The stress has pushed lease rates to the stress has pushed lease rates, the cost of borrowed silver, to over 30% annualized, the highest since data began. This is a massive, massive deal. These are the highest levels since the data has actually begun, leaving short sellers in a losing battle to roll or cover positions. Remember, it's all about the contracts. It's not just about people coming in and buying a couple ounces of silver from dealers. It's about these massive underlying contracts that are occurring. The imbalance has widened the London-New York price spread to more than $2 an ounce, an inversion that underscores just how acute the physical storage has become. Because of the fact that there is a shortage on physical silver, the price is now differentiating between markets, which is showing that something is building up. So what are we talking about short squeeze wise? Well, I'm going to tell you about the chart in a second and where I think silver can be going, the path to $100 as well as looking quickly at gold's price as well. But let's continue with this article before we go to the chart. So what began as a localized squeeze has now spilled into global markets. ETF inflows have surged, industrial users are stockpiling metal, and speculators are rushing to close leverage short positions before borrowing costs spiral further. The cost of borrowing to put a short position on silver is skyrocketing. People are now closing their short positions because they can't take it anymore. The ETF inflows for silver are increasing. They have to put that silver to the side. Industrial users, whether it's for solar panels, whether it's for electric vehicles, they are buying their silver now because the prices are going up. And also speculators, retail investors, they're now going long on silver. They're closing their short positions and they're buying ounces of silver at a sort of a remarkable rate now. Market makers in London, normally the hub of overcounting settlement for silver, are struggling to locate deliverable bars. They cannot find where to start these contracts because they don't have the supply, raising fears of settlement failures or forced cash closeouts if the situation worsens. Analysts say the squeeze has entered a feedback loop. The dwindling supply fuels panic buying. Remember, if people now start thinking, wait, we're running out of supply, there's a supply shock, everyone starts buying it. Remember, it's just market sentiment, isn't it? It's just the psychology of investing. Remember what happened with the toilet papers during COVID? There was plenty of toilet paper to go around, but as soon as people started seeing that toilet paper was running out on specific shops around the world, everyone started stockpiling toilet paper because they thought it was running out. So now that the news and the press is coming out with stories, which is true, that the supplies are coming down, more people are going to go out and buy silver and try and fill their contracts and try and buy for their industrial purposes. Um, and that's going to cause a bigger supply shock. So we are in sort of a feedback loop. So there's dwindling supplies that's fueling panic buying. People are FOMOing in now, which tightens supply even further. The last time London faced a comparable crunch, when was it? 1980. And what happened in 1980? We got an incredible short squeeze. So this was a very interesting story, and I do recommend people go and look at the Hunt brothers and what happened there. But the last time London faced a comparable crunch was during the 1980 Hunt brother episode. But today's stress is amplified by industrial demand for solar and electronic producers. Plus, rising retail hoarding amidst inflation hedging, some banks now warn that within a market intervention, the market could stay in a state of seizure for weeks. My thoughts here, again, I'll come onto the chart and I'll tell you about the short squeeze where I think it can head to. Nothing I say is financial advice, it's my thoughts and opinions only, so please not buy or sell based off anything I say. So, London scramble exposes a deeper fragility, in global precious metal plumbing. A reminder that paper markets depend on physical availability. If you are enjoying this so far, make sure you are hitting the like button, subscribe if you haven't done so already. Let me know in the comments and in the live chat if you are investing in silver or any precious metals. If tightness spreads to COMEX in New York, US traders could face similar margin stress and delivery constraints, echoing the 2021 silver squeeze, but on a far larger scale. We did get a mini short squeeze in 2021, but this could be much bigger. For investors, this is double-edged setup. Short-term volatility is extreme, but structural supply deficits driven by industrial demand and weakening mining outputs may keep silver elevated long after the squeeze subsides. So let's have a quick look at gold and silver as we speak. Remember, we just covered a story about the pound coming down and unemployment going up. Do check it out. It'll be on this channel. But let me go over to the gold and silver charts, because gold has gone on an incredible run and silver is just catching up. So if we zoom out off the gold chart, you can sort of see what's in store for silver potentially. We've seen gold, and remember, we've been bullish on gold for the last 3-4 years. We saw a massive cup and handle structure on gold. The handle was formed between 2020 and 2024. Then we had the breakout. Then we hit our first targets, and gold has been parabolic. People have been shorting gold at 2,700, shorting at 3,200, shorting at 3,700. But I kept saying, do not fight the trend. We are in a parabolic run up for gold. There is uncertainty in the world. Interest rates are coming down. Everyone wants a piece of gold. Central banks are buying gold. People are moving away from the dollar. So don't bet against gold. And we've seen gold go on one of the most incredible runs in the history of gold. But silver wasn't keeping up, and now it's coming out to play. Silver had the similar setup with silver. With the demand. However, we've only just broken out of all-time highs. Remember, $50 was a key level in 2011. It was also a key level in 1980 with that big story on the Silver brothers, the Hunt brother story. And now we're finally, about 45 years later, we're breaking those levels once again. I do think silver, now that's broken $50, of course it's going to be volatile. I can't guarantee what's going to happen. I don't give financial advice, but my thoughts are silver can easily run up to the next first sort of major level of the target of this trade, another 50% up to $75 an ounce. And after that, we can see $100 an ounce, we can see $150 an ounce. Silver can go crazy. However, the initial short squeeze, I think it can take us to $75 an ounce, and I might be taking my first bit of profit from silver around $75 an ounce. I think that's where the initial surge from the supply shock from the short squeeze can take us there. Then it'll be volatile, then it can drop down pretty fast, and then we can go on our next leg up. But you can also look at the gold to silver ratio. We have been calling this to go down. Remember, Just earlier this year, we said we're now back over 100. I would be more interested in buying gold, silver than gold at this point because we are at historically high levels right now. What does this ratio mean? It's at 80.42. What does that mean? It means 80 ounces of silver gives you 1 ounce of gold. Historically, this has been much lower. Before the 2000, this was much lower. But even on this chart, the average is around 60. So we can expect silver to really start outperforming gold as well and start bringing the ratio of gold to silver back down to 60, 50, 40, 30. Remember, it can go extreme both ways and then average out at maybe 50. But everything does look in silver's favor right now, and we are getting excited for potentially a silver short squeeze. But remember, nothing is financial advice. We're going to be covering this on our show. We go live every single day, so you can pop in the live chat, ask questions. But do make sure you're subscribed. Make sure you have got the newsletter. There'll be a couple videos here. There'll be the newsletter link as well. So go and check it out. Leave me your thoughts and comments down below. But until next time, take care of yourselves and each other.